Ready to elevate your credit understanding and score? With insider tips and a plan, you can take action to improving your score, which can save thousands in unnecessary finance charges. Let's tackle today's topic with your coach, Credit Christy.
Hey friends, it's Christy, your credit coach. Thank you so much for joining me for another episode. Today, let's talk about the effect that your credit score has on things like insurance. A lot of people are under the belief that insurance premiums are based on your driving record for auto insurance. And while that is partially true, it's not the full truth. Insurance companies also tap into your credit scores, and it has an impact on what your premium is when it comes to homeowners insurance, auto insurance, and renters insurance. So I just read an article that the state of Washington has a new rule that will prohibit insurance companies to charge higher premiums for auto and homeowners insurance due to a credit score. This new rule is aimed at preventing people with poor credit from facing higher rates for homeowners insurance, auto insurance, and renters insurance, and it goes into effect on March 4th of this year, 2022. So Washington State is arguing that credit scores to calculate insurance premiums is unfair. There was a study done in 2020 by the Consumer Federation of America, and they found that good drivers, in other words, good driving records in Washington State that had poor credit, and they defined poor credit as a 580 credit score or below, paid an average of 79% more than those with excellent credit. 79% is a huge impact when you think about how much auto insurance can cost on an annual basis. In addition to Washington State, Hawaii, California, Michigan, Massachusetts, and Maryland also have this same rule. So let's talk about this for a minute. Credit scores are used by lenders to assess risk of lending, but they're not the only ones. In addition to lenders and insurance companies, utility companies, landlords, and even your cell phone provider taps into your credit profile and will base costs and what you qualify for, what kind of contract terms you'll qualify for based on your credit scores. And then there are millions of Americans that are essentially invisible. They just have no credit established, so they have no credit profile and no credit score. So where do they fall when it comes to how insurance companies and some of these other organizations look at them as far as a credit risk? So there are some insurance groups that are filing actions to prevent this rule from going into effect. They're saying that it is justified to use credit scores because they are generally a good predictor of future insurance claims. And by keeping this rule in effect, it could result in an overall insurance rate increase for a lot of people, hundreds of thousands of people. So I pose this question to you. Do you believe that it's fair to use your credit score on how insurance companies provide a premium or cost for your insurance? And again, it's not the only thing that goes into effect. Also, past claims, your record, those kinds of things, right? If you've got a lot of tickets or insurance claims or something like that, obviously your auto insurance would be higher for that amount. So I just wanted to put together this quick little episode to share with you that your credit is so much more than maybe what you even thought it was. It's that important to have a really great credit profile because it affects so many things in your life, including the cost of insurance in most states. I'd love to hear from you. If you have questions or thoughts, send me an email at questions@creditchristy.com. And if we haven't connected on social, please connect with me at Credit Christy. Thanks so much for joining me for another episode. And until next time, my friends, stay well.
Subscribe now and share with a friend to stay in the loop for new credit content and insider tips to maximize your credit knowledge. And follow Credit Christy on Instagram.